What's up, guys? This is Ty Zen and my buddy LeonFood.com here. We're broadcasting from the parking lot of a Bank of America in North Dallas. We needed some shade, and this is the only place that we found some shade to shoot this video. And we're here with PrisonOrFreedom.com. It's a blog where we talk about the tools, technologies, and the strategies to help people find more freedom in their lives. And in this video, we want to continue part 3 of A Million Killer Apps that's put out by James D'Angelo from the World Bitcoin Network. I was supposed to get with him and do part 2 a few months ago, but we keep missing each other every time I go to Boston. So I just finally decided, hey, you know what? Since my buddy Leon is here visiting me here in Dallas, we'll just go ahead and shoot it now. And I want you guys to stick around because we're going to talk a lot about the million killer apps that can come from the Bitcoin public ledger technology that's going to revolutionize finances, right? And also, at the end of this video, we want to talk about this Bitcoin prize that Leon and I are giving out. Because in the first, one of the older videos that Leon and I did, people recognized that we were in a Maserati, and we didn't expect that. So in the end of this video, guys, we're going to talk about a contest we're having for the viewers who can figure out what kind of car that we're in this time.
That's right. Maserati's gone.
The Maserati's gone, right? So we're going to see if you guys can figure out what car we're in this time, all right? So let's go ahead and get started and talk about the million killer apps that can come from the Bitcoin public ledger technology and how it's going to change finances. Leon and I wanted to discuss about the theme of being permissionless and being able to do things in finances without having to ask anybody for permission, right? And we're going to talk specifically about trading, okay? In most of the world today, Leon is from China, I'm from Vietnam. It's both communist countries, and one of the things that the citizens of those countries cannot do is that they're not allowed to go into other markets, especially in the financial markets, and trade currencies and trade stocks, commodities, and other financial products from other countries. And that's a huge downfall for these people. And these people that's in these countries should be able to access any market from anywhere in the world. You know, Leon and myself in America, we can access other markets, but that's not the same for other countries, you know. And we made a list here. You want to turn on your list? We made a list of things here that there's a million things that is going to change in finances due to the public ledger technology that Bitcoin has provided, that Satoshi Nakamoto has given us. This public ledger technology allows everyone to be able to read and record to audit the ledger without having to ask permission from anyone. You want to talk about trading without permission to get that started?
Well, yeah. Well, in order to start trading, we need to open an account, right?
Yeah.
We need to get, and that alone
is a barrier to
entry, right?
Because for people like in China and in Vietnam and, you know, Africa, especially like Nigeria and stuff, they won't let people from Nigeria open up any kind of trading accounts in America because they think that everyone there is full of crooks and full of fraud. And you and I both know that there's bad people in every country and there's good people in every country, but we should not make the laws based on the bad people.
That's right.
You know, and then, you know, push out the good people that are trying to do right, right? So one of the things that the Bitcoin technology has allowed it to do is that you no longer need permission to set up an account. Anyone, regardless of your race, your age, the country that you come from, the language that you speak, anyone can go into the Bitcoin market and be able to open up an account and start trading Bitcoin.
That's right, because the security is based on computation.
Math.
It's not based on keeping bad people out.
Yeah.
Right. It's a totally different paradigm, where right now we need to, you know, the current financial system is based on trying to figure out who's a criminal and who's not a criminal.
Yeah.
Right. And that's impossible to do, really.
Yeah. No one's gonna be able to enforce that 100%, right? But then you talk about how, because it's based on math, even if bad people enter the system, they cannot change math.
Well, it's not that. Bitcoin has gotten the incentives right.
Yeah.
It's not based on figuring out who's a good person and who's a bad person.
Yeah.
Right? It's based on the incentive structure, where if you do good, you're rewarded.
Yeah.
And if you do bad,
you don't get
punished.
Nothing.
You're punished.
Yeah.
Right. So it's about creating the right incentives for people to do good, rather than having a government agency to punish people who are bad actors.
Yeah.
Right. That's how Bitcoin has succeeded. It's without any kind of regulator or anything. It's just by doing the right thing, you're benefiting yourself, and if you don't do the right thing,
you won't get any benefits,
and you'll lose money.
Yeah.
Right? You'll get punished. Right.
Yeah. The other thing that I wanted to share is that Bitcoin has allowed people to trade without any capital requirements. So, for example, like I trade through TradeStation, which is a very popular broker in America, and they require a $5,000 minimum to set up a stock account. And if you want to trade stocks, buy and sell stocks as often as you want, as many times as you want in America, you have to actually put a down payment, or you have to put in your account at least $25,000. And the minute it drops below $25,000 by 1 penny, you have to add more to it, or else you cannot buy and sell stocks as often as you want. So that limits, that creates a barrier to entry to a lot of the smaller people and the individuals who want to manage their own retirement accounts and take care of their own money. Now they have to come up with $25,000 to do that. You know.
Yes.
Whereas Bitcoin, there is no minimum requirement.
There is none. No.
You know, and you can go long, you can buy it, you know, expecting the price to go up, or you can sell it short, expecting the price to go down, without any capital restrictions or requirements either.
Yes, any capital restriction would be imposed by the brokerage running so the individual exchanges.
Yeah, and if you don't like their rules, you can just move to another exchange.
Yes.
Okay. Yes. Yeah, and there are no shorting rules in Bitcoin either.
There are no shorting rules as of right now, but once again, the problem is who is creating the shorting instruments.
Okay.
Right?
Yeah.
That is the restrictions that, and there have been exchanges that have you know, the problem is, remember, without regulation, then it cuts both ways, right? It means it puts responsibility. There's no government that's going to protect you either, right?
Yeah.
So on one hand, yes, it reduces the barriers to entry.
Yeah.
But on the other hand, you do have to look out for yourself now. You need to become more educated. You need to you know, basically be street smart to know like what you're getting into.
Yeah.
Right. Because you know, with rewards come risk. Right.
Yeah.
And right now, the financial system is heavily regulated. Is we don't even give those people the option.
Yeah.
Right.
Yeah. And that also, what it also does too, is that the Bitcoin's public ledger has allowed, because right now there's a lot of big institutions that can sell short. And in case the audience, in case any one of you guys don't know what selling short is, selling short means that you are selling a financial product, expecting it, and you're expecting it to go down in value or go down in price, and you're going to profit from it. Okay, so there's ways to make money in trading where when the product goes up, you make money, but there's also ways to make money so that when the price goes down, you make money, and that's called selling short. Now, explain what naked shorting is.
Naked shorting is when you sell short and you don't actually deliver.
You don't have the product.
You don't have the product to deliver to
the broker doesn't,
the buyer. Right?
So one of the things that the Bitcoin public ledger will allow or prevent, in my opinion, is the ability for big institutions to naked short, meaning that they're selling short the shares of a stock or the shares of a oil or gold or silver or any of those products, right, without actually having it.
That happens all the time in the commodities market, the gold market, the silver market. There's the majority of the trading that happens is all just paper.
Yeah.
You're not really trading the commodity.
Yeah.
You're just saying, I'm going long and you're going short.
Yeah.
And you want to go short some more, you just create more paper to go short on.
Yeah, because there's not enough gold or silver in the world to actually back up those paper contracts.
And the way they settle it is those contracts are not actually settled in the commodity. They're settled with cash.
Yeah.
Right? It's a cash settlement. It is not like, oh, you went long a ton of gold, I'm going to settle your trade with a ton of gold.
Yeah.
It's mainly, all right, you went long at this price, and now gold is trading at this price, and we'll just settle the difference with cash.
Yeah, so there's no physical gold involved.
There's no physical, or whatever the commodity is.
But in Bitcoin, it's not going to be easy to do that because we know that there's a limited supply.
But not only that, you can't really, because it's so easy to deliver Bitcoin.
Yeah.
Right? It's so easy, it's just digits.
Yeah.
Right? That it's it probably won't be settled the same way as a physical commodity. Because nobody's going to bring 1,000 bushels of corn or whatever they're trading. And that's one of the advantages. It's much harder to manipulate cryptocurrencies. Because there's an expectation that they will be actually, like, if I bought a Bitcoin from you, I expect Bitcoin from you. Right. There's no reason why you can't deliver it to me if you sold it to me. Right.
Now, in addition to the shorting rules, the naked shorting that the institutions are doing, and now the Bitcoin public ledger is going to help cut out a lot of that nonsense. We also talked about having licenses, because I don't know how it is in China and Vietnam or some of these other countries, but I know that in America, in order for you to trade someone else's money, you need to have a CTA or a license or some kind of government regulated license.
That's right.
For you to do that. Whereas with Bitcoin, if you want me to trade it, you can just send me the Bitcoins and I'll trade it. Or if I want you to trade my Bitcoins, I can just send it to you.
The government, as of now, there's no way for the government to regulate Bitcoin. What they can regulate is the on-ramps and off-ramps.
Right? When you change it, when you convert it from Bitcoin to fiat, to the dollar,
or
US dollar, or to the euro or the pound or something like that.
That's where the government comes in. But like once you are in Bitcoin, then it becomes software. Your money has literally turned into cloud money, right? And it becomes where you are free to do whatever you want. Now we're still very early in the stages. There's a lot of these services don't exist yet. So there's, I mean, compared to the traditional financials markets, we're still very limited. But we're limited because of technical reasons. Right? We're limited because people, the infrastructure hasn't been built out yet. Right? But they're working on it. I mean, there's hundreds of millions of VC capital is going towards building this infrastructure.
So basically, if a trader shows good results with his Bitcoin trading in Africa or in China and Asia or any country like that, right? Or even in the Middle East that's not an ally of the US, right? They can actually, ask for funds, and if they've built up a good track record and have the credibility, they can actually, like you or I can actually send money to them and let them manage it and let them trade it. And they don't need a CTA license or any kind of
because
thing.
No one can stop a Bitcoin transaction. Like if I want to send money
US dollars.
If I want to send US dollars,
then the government can stop that.
I have to go through like Western Union, or I have to go through PayPal or some whatever. I have to some financial institution.
And we have to, like, for example, right now we're parked in it's interesting, but we're parked in a Bank of America parking lot while we're shooting this video in the shade, right? We were driving up and down Dallas, and this is the only place that we found some shade under a tree in the Bank of America parking lot, so we decided to shoot the video here. But what's ironic is that if I want to send money to you, if you were in China right now and I wanted to send money to you, I have to ask permission from Bank of America. They have to give me permission to send money to you.
WikiLeaks was a classic example, right? They're they because of what they were publishing, the U.S. government basically cut off all of the traditional Visa, MasterCard, bank wires. They cut funding from them. And so the only way they were able to get funding was through Bitcoin. Right? And that just shows that they were not able to stop those transactions from going through.
Okay. Earlier we were eating breakfast and you mentioned about some of the other, killer apps that can happen in the financial world, including being able to audit some of the financial institutions. Like you were talking about, like Lehman Brothers, how they collapsed, how some of these big banking institutions like Lehman Brothers, like AIG and Goldman Sachs, and these big banks where right now, if the shareholders are not allowed, they don't have permission to go into their ledger, the bank's ledger, and audit their books and things like that. But now with the Bitcoin technology, right, the companies that have integrity, they can put their ledger on the Bitcoin public ledger, and their accounting.
That's a possibility, right? It's called triple entry accounting.
Talk a little bit about that.
Okay, so the typical traditional books is where this was double entry accounting was invented back in the Renaissances, right? The Medici family, I think. In Italy.
Why was it invented though?
It was invented so that as an owner of the company, that you could trust your own books. Right. It had the. You
didn't have to trust. You can start trusting people outside your own immediate family members.
Or outside of your trusted circle. Right. And that's how they were able to scale. You know, they had the first big banking institution, right?
In Europe?
In Europe is,
Yeah.
and it is what financed like the Michelangelos and
Yeah.
the Raphaels and all those, you know, the whole Renaissance art is how this was financed, right?
Yeah.
But the problem with that is it allowed you as an owner to trust your own books, but it didn't allow outside
Investors and shareholders
to know that, all right, well, you just presented me with an income statement saying you did, say, 100 million in revenue. How do I know that actually happened?
Yeah.
Right? Maybe you know, the whole thing with cooking the books, right?
Yeah. So now that requires a third party to come in and audit your books.
Yes.
Right.
And to say that we are vouching that this is true.
Yeah. So let's just say you got the iPhone here, right? Let's say Apple wants to prove to its shareholders that it sold, you know, it made X amount of dollars, billions of dollars this year, right? In order to show that those statements are real, they actually have to pay a third party to come in, audit the books, and create a report, sign off on it, and create a public report for the shareholders and the investors
and the regulators too.
and the regulators to know that Apple's books are clean.
Every publicly traded company.
Okay.
Yes.
But there is a conflict of interest with that.
Yes.
Talk about the conflict of interest.
Well, the thing is, Apple is the one paying, and this is what happened in.
So when you say Apple is paying, what are you talking about?
Well, they're
paying the auditors.
They're paying the auditors to audit their books, right? The auditors need to get paid, right? They're doing work, right?
Yeah.
But that creates a conflict of interest because the auditors are creating a report for the shareholders, for the outsiders, right? The government regulators, the investors, everyone else.
People outside of the company.
People outside of the company.
Yeah.
To prove their statements are true, but you know, this happened with like Arthur Andersen and Enron.
Yeah.
Right. Where they were paying Arthur Andersen to audit their books.
So people outside the U.S. know, Enron was an energy company based out of Houston, Texas, and then Arthur Andersen was the accounting firm,
the auditor,
the auditor that was hired to audit Enron's books to make sure that everything was straight.
And we know what happened.
Yeah, it was a scam.
It was a scam from the beginning, right?
Yeah.
They paid off the auditors, and why were they able to do that? Because the auditors were not just auditing their books; they also do consulting.
Yeah.
Right. And we saw what happened with Enron, that they were saying, if you don't sign off on these false statements, we're going to pull funding other businesses, right? Not only just what they were paying them to do the auditing, but all the other business they were giving them, right? These accounting, and that created a separation where the firms had to be separate. These big 4 or 5 accounting firms had to separate their accounting, their auditing division with their consulting, right? With the other consulting that they were doing. Yeah. But nevertheless, the fundamental conflict of interest is that the person paying the auditor has a conflict of interest. Yeah. Because if it was the shareholders and the investors or the regulators paying the auditors, it'd be different. Exactly. It would be different, but right now that's not the way it works, right? Okay, so basically what you're saying is that by using the Bitcoin public ledger, it has changed, it will allow changes in finance because it allows the triple entry that you're talking about, to where now instead of relying on a third party like Arthur Andersen, or was that who it is? Oh, yeah, or KPMG, Price Waterhouse, one of these large accounting firms to come in and audit a company and verify that it's accurate to the public. You can actually use the Bitcoin public ledger, and now since it's a public company and their numbers are public, they can put it on the public ledger. Because how do you know something actually happened, right? We talk about one of the things where, how do you record history? Because that's what accounting is. Yeah, right? That's what James talks about in Million Killer Apps Part 2. If you guys haven't checked it out, go check it out, Million Killer Apps Part 2, where James talks about how, right now, there's no permanent way to record accurate data into the history books, because the people who have the biggest guns and the biggest fists, they're the ones who go in and write the history books, and they can change the past. They can go back and change the past. Yeah. Right? I mean, it's really, but with the public ledger, right, we actually have a record of what happened since 2009, right? About as far as Bitcoin, right? But this data can represent not just how many Bitcoins you and I have, but also it can be tied to data outside using hashing, technology, that you can know that, all right, this document existed at this point in time.
Yeah.
Right, and that's irrefutable.
Yeah, and what I like about it is that it allows the public, the shareholders, the regulators, and anybody that needs to audit what these companies, their books, right, their accounting, they can do it without permission.
That's right.
They don't need to ask anyone's permission.
That's right.
If you're a shareholder for Apple and you want to go in and audit their books to make sure that they're doing it correctly or their numbers are accurate, you can go do it in the public ledger, the Bitcoin public ledger, without having to ask anyone's permission, need a license or anything.
Yeah, and there's a startup, you know, this brings me, who's building this infrastructure, who's trying to build it. And there's one, like I know of one startup in Austin, they're called Factom, right?
Yeah.
And they're trying to do this. They're actually trying to create like this data layer.
Yeah.
Built on top of the Bitcoin network.
Yeah.
Where they can then, you can then validate this, do this type of auditing. That's one of the applications that they're trying to build the infrastructure. Because right now, like all we're talking about is in theory right now. The possibilities.
Yeah.
Somebody's
that's what the World Bitcoin's Network's whole concept of a million killer apps is about, is being able to go out there and inventing all these new apps, you know, that will revolutionize finances. Okay. Yes. Now you mentioned also earlier.
So yeah, we were talking about the transparency, like AIG.
Okay, so what is AIG?
Okay, AIG, there was this large insurance company. Okay. That was selling a lot of basically debt insurance.
Okay, so who would need AIG's service?
Banks, anyone that was issuing debt.
Okay.
Okay, so debt is something like it could be a bank, it could be cities and governments, right? They have financing needs. You want to build a new sewage plant or something, and it's going to cost like tens of millions or hundreds of millions of dollars, and it needs to be financed over time.
Yeah.
Right. So then you have to borrow money, right? You gotta borrow money. That's going to be repaid in the future. Yeah. And then one of the things is you could buy insurance on this money, on this debt, right? In case the person doesn't pay. Yeah. The insurance company, in this case, like an AIG, would cover it. Yeah. Right. And so so there's this debt that was created. And then there's this insurance
during the financial bubble in 2008.
In 2008.
Around that time.
So remember, there's they created the debt, which is a kind of security, and then they created a derivative, which is like the insurance on the debt. Yeah. Called credit default swaps, right? Yeah. And so the idea is this insurance trades the security that goes up and down in price based on the perception of what is the risk on that debt, right? Yeah. And so the insurance, if it's a very risky debt, then it's going to be very high insurance, right? Yeah. And it's going to cost a lot to insure that debt. If it's low risk, then these default swaps would trade at a low price. Yeah. Because the odds of that, remember, if they do pay off, then these are worth nothing, right? They expire worthless. Yeah. If the company or the entity borrowing the money defaults, then these debt instruments, these derivatives pay out, right? Okay. Okay, so in the case of Lehman Brothers, there was actually far more insurance than there was actual debt. Okay. Does that make sense? It wasn't about insuring the debt anymore. It was creating this new speculative security to gamble whether or not a Lehman Brothers would go out of business. Yeah. So it would be almost like if you wanted to, you could buy a bunch of these CDSs and then try to make Lehman go bankrupt.
Because that's a conflict of interest.
It can be. It's you were buying insurance. It would be like me buying insurance on your house, right? Hoping it burns down. Yeah. Right? And then go setting the fire.
Yeah, but it's illegal because...
it's obviously illegal.
It's illegal because you don't own the house.
I don't own the house.
So you cannot buy insurance on my house.
That's right.
And then the second thing is, you shouldn't be sitting there trying to wish that my house burns down.
Exactly. But in this, because remember, derivatives were not regulated at all, right? That they started creating, companies like AIG was creating all these derivatives out of nothing. Yeah. And then they were selling all this insurance. They was like, hey, you know what? I can sell even more insurance on the debt that doesn't exist because I could make money on it. Okay. Right? So if AIG was there thinking that there's, say, I don't know, I throw a number like $400 million in debt. Yeah. And I could sell $1 billion worth of insurance.
To cover that debt.
To cover that debt. Like I'm selling more insurance than the debt that even exists. Yeah. Right? And then it becomes this, because if they pay off the debt, it's all mine. Oh, okay. Right? Okay. And of course, we know what happened in 2008.
Yeah.
People started defaulting on their loans, right?
Yeah.
And then AIG didn't actually have the capital
Yeah.
to cover the insurance that they sold.
The companies like AIG that the U.S. government bailed out and took a bunch of taxpayers' money to help them survive.
Yes.
Right. And in the real, I mean, in an ideal world where we can audit what AIG, who is an insurance company, they were selling insurance for products that they didn't have. Right?
Right.
Or
yeah,
is that
yeah,
correct?
exactly. It would be like your house is worth, I don't know, whatever it's worth, like 200 grand, right?
Yeah.
It would be like I'm selling $1 million of fire insurance on a house that is only worth 200,000, right? And if it burns down,
yeah,
then there's about $1 million worth of liabilities that
you can make,
right?
Which is illegal because you're selling insurance to something that. For one,
I don't own it.
You don't own my house.
Yeah.
I own it, so I'm the only one authorized to buy insurance.
You should be the only one authorized to buy insurance, right?
Yeah.
And secondly, what they were doing is they didn't even have the $1 million to cover it.
Oh, so
if it actually did burn down, they wouldn't be able to pay it.
Okay, so they didn't have enough money to cover that.
Capital, yeah.
So
they were selling insurance. And
they don't own.
They don't own, and they don't even have the money to pay for it if it does happen, if that event happened.
Okay, so basically with the Bitcoin public ledger, it'll allow the public to come in and audit them without any permission.
One of the things, okay, so this ties back into like smart contracts.
Yeah.
Right? Where you could create this type of derivative, right? Because insurance is a product that people need.
Yeah.
Right? We do need to insure our houses. We do need
cars and things like
whatever
that.
things like that, right? So we could spread the risk across a larger group of people.
Yeah.
Right? But what the potential of, part of this million apps is you could make sure that the collateral is there.
Yeah.
Back up because
basically collateral meaning that you actually have the money to back up what you're insuring.
That's right.
So in case somebody's house burns down or get into an auto wreck or something, you can actually cover the insurance that you sold to that customer.
That's right.
Okay.
That's right. Right now we don't know that, right?
Yeah.
Like insurance companies sell us all this insurance.
Yeah.
Do they actually have the capital to cover us?
So let's say that I live in North Dallas right now. All the homes average, $250,000, $300,000, right?
Yeah.
And so they're selling. So all these home insurance companies in North Dallas, they're selling insurance, but we don't really know if they actually have enough money.
Well, with AIG, we knew that it happens, right?
Yeah.
Like we knew that they didn't have the money to actually cover what they were selling.
Yeah.
Yeah.
So if they're selling insurance to cover, let's say, 1,000 houses, but then if those 1,000 houses get hit by a tornado or something, we don't know they actually have enough money in their accounts to cover that.
Well, they say they do, right?
They say they do, but there's no way for me, you, or anyone in the public to audit them.
Well, the way it works now is they hire a third party, one of these big accounting firms, and they come in and they vouch, saying, yes, XYZ insurance company has...
But again, there's a conflict of interest because the insurance company is paying the auditor.
Well, we know with Enron what happened, right?
Yeah.
Stuff like Enron, stuff like AIG, we know that doesn't always work.
Yeah. Okay. So, all right. So there's, so basically, those are some of the financial apps that can come out of this Bitcoin public ledger, guys. And we just wanted to share that with you guys, and make this part 3 of 1 million killer apps for the World Bitcoin Network, and for James DeAngelo, since we haven't had time to catch up with him in Boston. All right, guys. Before we sign off, right, we want to say, hey, thanks for watching this video with us and subscribing to our channel, prisonerofreedom.com. Like I mentioned at the beginning of this video, the last year, I think it was, we shot some videos about NXT and some Bitcoin, and people approached us at the Texas Bitcoin conference, and they wanted to check out your Maserati, right? Yep. And Leon and I could not figure out how people knew that we were in a Maserati, because I sure as hell didn't know. But apparently they were able to look at the interior of the car and figure out that it was a Maserati. Okay, so you've gotten rid of the Maserati since then.
A new car, yeah.
You got a new car, and we were checking it out, and we have we want to see if you guys can still figure out which car we're in this time.
That's right. Just by looking
at the interior, because obviously you guys figured out what it was the last time you guys saw the interior, right? So for those of you guys who watch this video and leave a comment, if you can figure out what car we're in this time and leave it in the comments section, the first person that gets the car correct, we will you'll send them $10 worth of bitcoins, and I'll send you guys $10 worth of bitcoins.
$10 worth of bitcoins.
Okay,
yeah.
So make sure that you leave a comment and say what car it is, right? What car we're in, and your Bitcoin public address, and we'll send you the bitcoins. Okay,
right.
And it's the first come first serve, right?
That's right.
And hey, what if somebody has the same car? The more detailed it is,
the more detailed
the information is about this car, the more that it'll be accurate.
Yes.
Okay.
All right. Cool.
So, all right, guys. Thanks for watching this video, guys, and allowing us to share with you guys the tools, the techniques, and the strategies to help you find more freedom in your life. Please click like, give us a thumbs up if you like these types of videos. If you don't like it, give us a thumbs down so we'll know, so we don't waste time making them. And then subscribe to our channel, and we'll see you guys in the next video. And looking forward to see who it is that figures out what car we're in this time.